Stocks open lower as rate hike fears return. Stocks opened sharply lower Friday after comments from a Federal Reserve banker suggests that the September rate hike from the nation's central bank might not be totally off the table after all. Federal Reserve Bank of Boston President Eric Rosengren, in the text of a speech he's making today, said there is a reasonable case can be made for a rate hike, according to the Wall Street Journal. Those words rattled Wall Street, as investors had pretty much written off an interest rate increase at the Fed's September 20 to 21st meeting following the weaker-than-expected August jobs report released Friday. Although Rosengren did not specifically mention September, his words, to a certain extent, leaves the door open to a rate hike, which Wall Street is not really positioned for. That got Wall Street's attention, and reduced some of the complacency in markets in early trading Friday. In early trading, the Dow Jones Industrial Average fell 142 points, or 0.8%. The broader Standard & Poor's 500 stock index was 0.9% lower. And the Nasdaq Composite, which had a stretch of record closes snap Thursday, was down 0.7%. Also weighing on consumer sentiment was a nuclear missile test by North Korea overnight, the latest provocation by the dictator-controlled Asian nation. It has been a quiet period for stocks, with volatility very low, a development that is starting to make some investors nervous. Heading into today's session, the S&P 500 has gone 52 trading days without a drop of 1% or more, only the 48th time that has happened since 1950, according to Sept, U.S. equity strategist at S&P Global Market Intelligence. So what's next? According to history, after going 50 days without a 1% plus decline, the S&P 500 slipped an average 1.5% in the following 20 trading days and fell in price 2 out of every 3 times, Stovall wrote.